Welcome back to my channel, Survive and Thrive. And today we are here talking about one stock out there and company who has much volatility and has had a lot of social media exposure, specifically with Twitter. And that company is Tesla, ticker symbol TSLA. And the reason why I want to focus on this company today is because there's been a lot of price action movement here in the last few months. And so jumping right into this first article in Barron's, Tesla stock has been on a tear. Deliveries can keep it going. The Tesla Model S Plaid can go from 0 to 60 in just 2 seconds. Tesla stock can gain more than 30% in less than 2 weeks. So just with that statement alone, you know that there is a lot of price action movement and volatility to Tesla. Even to the point, if Elon Musk tweets one day and says that he thinks that the share price is high, that will naturally drive and cause people to sell. And so with someone who is as influential as Elon Musk is, it just goes to show that he has quite the following when it comes to investors, as well as just people with general interest. Tesla has been on an absolute tear, rising for 8 consecutive days, its longest winning streak since January 2021. The stock gained 32% over that span, putting it over $1,000 and its market cap above $1 trillion for the first time since January 2022. Now let's keep in mind that this is also after a 5-to-1 stock split, and they're already up again over $1,000 per share. The streak ended Friday when Tesla fell 0.3%, closing the week at 1010.64. It was an epic run, but one that's not easy to explain. Such moves don't tend to happen in other ultra-large cap stocks. The largest 8-day gain in either Microsoft, Apple, Alphabet, or Amazon since the start of 2021 was a 19% gain in Amazon, which also happened this month. And Tesla run-ups don't always seem to line up precisely with fundamentals, frustrating bulls and bears. And that's what I'm talking about when I'm mentioning the volatility. What's more, big gains and big losses often mean the stock doesn't really go anywhere. Tesla, after all, is up just 3% over the past 3 months, though that's better than the S&P 500's 8% decline. And I do have holdings in this company, not as much as I would like, but I do continue to dollar cost average and buy those dips when I see the timing, especially like I said, the last few months where it's made a fairly substantial slide downward, creating opportunity for me to get more for my money. Still, Tesla doesn't tend to move without a reason, even if the reason is sometimes obscure. To understand why the stock is gaining now, it helps to understand why it was dropping before the move. Future Fund Active ETF manager Gary Black blames the Federal Reserve for Tesla's recent trading volatility. He notes that Tesla stock dropped 32% from late November when the Fed suddenly turned hawkish through March 14th, a period that saw the S&P 500 and NASDAQ Composite fall about 12% and 22% respectively. 2 days later, the Fed raised rates by a quarter point, and it was off to the races. Sell the rumor, buy the news, says Black. But that points to another issue for Tesla, inflation. And this has seemed to cause a lot of movement within the stock market in general, and a lot of wild swings up and down. And that will continue as we know that there is likely to be 6 to 7 more interest rate hikes in 2022. But since mid-March, inflationary fears have dissipated and been replaced by growth expectations. Tesla opened its much-delayed German manufacturing facility this past week to much fanfare, something that removed an overhang and likely contributed to the move in Tesla's shares, according to New Street research analyst Pierre Ferragu. A bigger deal than Berlin is expectations for Tesla's first quarter deliveries, which are likely to be reported on Saturday, April 2nd. So that is one date to mark on your calendar, especially if you are an investor in Tesla or looking for a chance to jump in. Wall Street expects deliveries to come in between 310,000 and 320,000 vehicles, up about 10,000 from earlier in the quarter. Rising delivery expectations are as good a reason as any for an auto stock to rise. Now Tesla just needs to deliver. Always you have to look at the long term. And from this one analyst in Yahoo Finance, Tesla is entering a new growth phase. Tesla is one of the market's best secular growth stories, according to CFRA analyst Garrett Nelson. That's important at a time where growth is really being hurt by inflationary impacts, Nelson told Yahoo Finance Live. Tesla is a story that's not immune to inflation, but the growth is really driven by company-specific factors. The growth for electric vehicles and also the startup of 2 new factories, one in Germany, which we mentioned before, just held the ribbon cutting, and then in Texas, where they will have a grand opening scheduled 2 weeks from now, Nelson said. So that date, I believe, is April 7th, so about a week and a half to 2 weeks out. And that's another upward potential catalyst to watch for if you are an investor and are intrigued by Tesla's company and what the latest news is. They're entering really a new growth phase with the startup of these 2 new factories that will increase their annual vehicle production capacity dramatically. And so that's what's really driving the earnings growth going forward, he added. Over time, they can really scale up with these larger factories. It really takes time. It's several month process to scale up to full capacity, he added. Nelson said Tesla's strategy is to do whatever it takes to boost production. They have a goal of increasing their annual auto sales from about 500,000 vehicles sold in 2020 to 20 million by the year 2030. So that's growth of 40x that needs to happen. And so they're really going to have to really accelerate their growth by building new factories. The Texas and Germany factories essentially double their numbers of operating factories from 2 to 4. And we believe they're looking at other factories around the world, he said. Building factories around the world is really going to help Tesla's growth in other markets and achieve economies of scale, which should help drive down costs, Nelson said. Setting investors' expectation, Nelson, who upgraded the stocks from hold to buy in January, believes that the automaker's goals are within reach. Tesla has been very good at setting investors' expectations. That's why the company has now beat earnings 9 of the last 10 quarters, he said. In Tesla's latest earnings report, revenue rose 65% year over year in the quarter, while the automotive revenue totaled $15.97 billion, up 71%. Very impressive. So that's why I continue to, like I said, look for those opportunities when some investors are looking at the company and not quite sure how they're going to continue to deliver on their word with production and deliveries and selling out and moving the share price downward, allowing me to really make that much more from my investment. It's always interesting to see these articles that talk about if you had made a $1,000 investment in a company 10 years ago to see how much it would be worth today. So let's go into the details on that. Here from Yahoo Finance. Here's how much a $1,000 investment in Tesla made 10 years ago would be worth today. How much a stock's price changes over time is important for most investors, since price performance can both impact your investment portfolio and help you compare investment results across sectors and industries. What if you'd invested in Tesla 10 years ago? It may not have been easy to hold on to Tesla for all that time, but if you did, how much would your investment be worth today? And that's what I talk about a lot on my channel, is being a long-term investor. You have to take the emotion out of it and put that to the side and really do your due diligence into researching the company and seeing the long-term vision. Because if it is one that you can really get behind and support, you want to look at those times when the company is not performing as well as a better return on your investment and time to jump in and get more shares to build your holdings for the long term and ride it out. Tesla's business in depth. With that in mind, let's take a look at Tesla's main business drivers. Over the years, EV maker Tesla has evolved into a dynamic technology innovator. It has transformed the EV space much the same way as Amazon changed the retail landscape and Netflix revolutionized entertainment. Tesla is the market leader in battery-powered electric car sales in the United States, with roughly 70% market share. The company's flagship Model 3 is the best-selling EV model in the United States. Tesla, which has managed to garner the reputation of a gold standard over the years, is now a far bigger entity than when it started off since its IPO in 2010, with its market cap crossing $1 trillion for the first time in October 2021. The EV King's market capitalization is more than the combined value of legacy automakers including Toyota, Volkswagen, Daimler, General Motors, and Ford. So very incredible statistic to see what they've been able to do since their IPO 12 years ago. and I think that there is more growth and opportunity to come. Tesla operates under two segments, automotive and energy generation and storage. While automotive and energy generation storage operations accounted for 87.7% and 5.2% of the total sales in 2021, revenues from services and others constituted the rest. Presently, the Texas-based company produces and sells 4 fully electric vehicles, the Model S, X, Model 3 sedan, and Model Y SUV. Their future product lineup, and some of you may be aware of this already, is the Cybertruck, semi-truck, and Roadster. The bottom line, while anyone can invest, building a lucrative investment portfolio takes research, patience, and a little bit of risk. If you had invested in Tesla 10 years ago, you're probably feeling pretty good about your investment today. According to this article's calculations, a $1,000 investment made in March 2012 would be worth $148,755, or a gain of 14,775% as of March 25th, 2022. Now that's a very staggering number and is not going to happen with every company you invest in. But if you look at it from the long-term scale of 10 years or more, that's when you can really start to get these massive gains. But you have to be able to, like this article says, take a little bit of risk after you've done all the research and understand the vision of a company, and just get behind it and support it and stay with it over time. Looking ahead, analysts are expecting more upside for Tesla. So just another reason why you're going to want to look into this, or if you're already holding Tesla, like I said, look at the future, what's going to happen in the next 10 years, and who's going to be there. I still think it's going to be Tesla. While they may not be the ultimate leader, they are going to be a big player in the industry. So I just wanted to touch on price action. You can see the volatility just in the last 6 months. If you go all the way back to September 2021, $780, $1,200 November 4th, going all the way down to $900 at the end of the year 2021, and really ramping up. $1,200 again, January 3rd, beginning of this year, coming all the way down again to under $800, so a $400 per share or just over drop. So that's the volatility that I'm talking about, and is honestly somewhat normal with Tesla. And so when you see that these short term, within a few months, change, that's your swing and opportunity to really add more to your position. I would love to hear others' thoughts about Tesla in particular, what other companies out there in the EV space you're looking into and investing in. And as always, use this forum and the comment section as a means to trade information between fellow investors. Help me to continue to build my YouTube community. I'm almost up to 200 subscribers, and I want to get to 1,000 this year. Hit that like button if you've gotten value out of this video. Make sure to subscribe and turn on that bell so you don't miss my future uploads. And don't just survive, thrive!